So we are currently having a look at the bond market right now, and this week has been nothing but sell side being eaten alive, really and truly. Because what we've got is, to be honest, it's not that bad because we're still trading within this bullish up close candle, which would be deemed as a bearish order block if we were to trade lower than 11623. So these two candles have failed to breach buy side liquidity, and it's currently trading pretty much 40-50%, I mean 60% inside of this candle, at least the closure. If we're going to talk about the wicks, then we tested the open. So the open is at 11714, and the lows for this candle is 11714. You can't make this up. You can't make this up. So we tested the open. Let's also have a look at this candle. The open is 11608. The close is 11717. And this bullish order block right here, which price would be magnetized to, failed to reach that area this week. So I do believe there is a good chance for a continuation to the downside. We do also have this macro fib in play, which would allow me to gauge whether market conditions is within a discount region or a premium region. Now, if you have a look from the lows to the highs, right, that's the dealing range. The lows, so low, lower high, higher low, right? But the higher low is below the consequent encroachment, the equilibrium. Consequent encroachment is the midpoint of a fair value gap. So we're currently trading within a discount in this region here for a short amount of time. I say short amount of time, but this is really close to more than a month, really, because these are individual 1 week candles. And we rallied up, took buy stops, and we're currently trading in the premium at this point in time. Now, what my projection is, what my bias going into the future, going into this week and potentially next week, is bond market is going to draw down into the equilibrium, potentially dropping into a discount once again. But then I will be looking for the mean threshold of this wick here, which would be the bullish order block if we were to negate the order block itself. So the wick of the last down close candle before we saw buy stops taken, the mean threshold of that, just by eyeballing it, roughly around 11510. That would be the area of interest going into the future. But if you were to have a look at immediate price action, then this area right there, which is at 11705 and 11631, that would be the area that I'll be looking for price action to continue to fall down into. So if you're looking and expecting any form of manipulation, there's a volume imbalance presented between the close and the open of these 2 weeks candle. And let's drop down into the daily time frame. We can have a look at, bless me, we can have a look at what's been going on. So get to that in a minute. So we opened, didn't take sell side, running to the upside, inside day, Tuesday, bearish doji, volume imbalance, took relative equal highs but failed to close above 120.20. Failed to even take this higher. I mean, we did get that there last week, but this is a new week and we failed to get up to that region there. And we followed the next day with a bearish down close candle, which created a imbalance in price, a sell side imbalance, buy side inefficiency. Took out sell side, sell stops, daily sell stops. Thursday, gapped lower, traded inside of the Wednesday's candle. So we did get the manipulation to the downside into this fair value gap right here. Fell to get to the consequent encroachment of this fair value gap. Closed, and then the Friday rallied a bit higher, took sell stops, traded all the way into the last down close candle of the last two down close candles for the day on the daily time. On the day, my God, on the daily time frame. Yes, that's what I said. So this is a mixture of multiple confluences. So this would be the order block, bullish order block, alongside the volume imbalance, and you got that perfectly. So I do believe that you could follow through. First point of interest would be 11728, which would also go hand in hand with the lowest displacement in this imbalance right here. Although it's been filled, but there was no candle body that came to reclaim this area, so I do believe that we can continue into that area. At the same time, we do have this imbalance that throughout the week we could actually be bullish, run into this area, and then rally lower. This lower projection goes hand in hand with yields running up into the 4.450 region. So it is a low hanging fruit, and I am also expecting 4.479 if this area was not to hold up to be taken out. So if you just go into the hourly time frame, you can clearly see how the week's panned out. Range bound price action before we got the shift in market structure, and then we had the rally right back up into the higher time frame. Let's go into the hourly time frame. Fair value gap, reclaimed it, sold off, massive sell off, and then we've got consequent encroachment of this wick there that failed, so that I can delete. And yeah, we've got fairly big range to work with. I'm going to stretch this out. I'd be very fascinated to see how Sunday's open treats the bond market, because even a retracement into this order block right there would be considered healthy. As time goes on, guys, I'll keep you guys updated, but it won't be on YouTube. It will only be on TradingView. So please go on TradingView, type up my name, Legend Since, and you'll be able to gain access to my intraday analysis and my intraday thought processes throughout the trading week. So with that being said, peace.